Most crypto investors spend their time searching for complicated indicators, expensive software, and somebody who can tell them the exact moment Bitcoin will reach the bottom. But there is a completely free tool that anybody can access, and I believe it is one of the most underused tools among everyday crypto investors. It's called the Crypto Fear and Greed Index. I've used this tool for years and it has helped me be profitable across multiple market cycles. Today, I'm going to teach you how to use it, what it can generally tell us, and just as importantly, what it cannot tell us. Because extreme fear doesn't automatically mean Bitcoin has reached the bottom, and extreme greed doesn't guarantee that we've reached the top. I've now studied every reading since the index began in 2018, and we're doing this historical experiment with an initial starting of 20,000 US dollars. It became approximately 578,000 US dollars, compared to it being around 220,000 US dollars if we simply held it. What the data reveals is why these emotional zones matter far more than trying to guess one perfect day. So let me show you how to stop guessing Bitcoin exact top and bottom and start using market emotion to make more informed decisions. Before we get into it, make sure you subscribe to the channel and press that hype button below here on this video on YouTube. It's completely free to do, but it also tells YouTube that you want to see more genuinely useful crypto education, and it really helps this channel continue to grow. When prices are flying and everybody is making money, people become greedy. They start believing prices can only continue to rise. They chase coins they previously ignored. They increase their risk and they convince themselves that this time it will be different. But then the market turns. Prices fall, confidence disappears, and those same people become frightened. Instead of looking for opportunities, they panic. They sell because seeing red numbers makes them feel as though their market can only continue to fall. In other words, most people feel safest after buying prices after they've already risen, and they feel the most uncomfortable buying after prices have fallen. For years, I've tried to do the exact opposite. Serious fear makes me increasingly interested in accumulating. When everybody becomes euphoric and suddenly believe that they are now a trading genius, I become more cautious and start thinking about taking profits. I'm not claiming that I can predict the market. I can't, and neither can anybody else with complete accuracy. This index has worked for me because it reminds me when my emotions and everybody else's emotions are most likely to produce expensive mistakes. The original Crypto Fear and Greed Index is provided completely free by alternative.me. It runs from 0 to 100. At the bottom of the scale, we have extreme fear. Then we move through to fear, then neutral, then greed, and then eventually extreme greed at the opposite end. The index is primarily focused on Bitcoin, and it considers things like including volatility, market momentum, trading volume, Bitcoin dominance, social sentiment, and search behavior. Extreme fear can indicate investors are becoming excessively worried, while extreme greed can warn that the market is becoming overheated. But notice the language that I'm using. It can indicate an environment. It does not identify one guaranteed price. The index began on the 1st of February 2018 with a score of 30, which represented fear. Just one day later, the reading collapsed to 15 and entered extreme fear. Bitcoin was trading at approximately 8,788 US dollars. But that was not the bottom. By December 2018, Bitcoin had fallen even further to approximately $3,183. That means somebody who treated the first extreme reading as a precise buy signal would have watched Bitcoin fall roughly about another 65%. They may eventually have made money, but emotionally, how many people could have watched that happen without panicking and selling, especially if they're relatively new to crypto? This is where people misunderstand the tool. Extreme fear is not the index shouting, this is definitely the bottom, buy everything today. It's telling us that we are inside a fearful environment. That environment may last for days, months, or even longer, and prices can continue falling throughout it. Extreme greed creates the exact opposite problem. It can appear while a bull market still has considerably further to run. If you sell everything on the first extreme greed reading, you could sacrifice a huge amount of the remaining upside. So I don't view fear and greed as two buttons marked buy and sell. I view them as zones. And this is where my understanding of the strategy has improved. The fear and greed index tells me what the market is feeling. The wider macro environment helps me understand why it feels that way. And my personal risk management determines what, if anything, I'm prepared to do. The same extreme fear reading can mean very different things. If interest rates are rising, liquidity is disappearing, and the wider economy is deteriorating, fear could persist. If inflation is cooling and liquidity is returning, the reading may be appearing in a very different environment. The same applies to extreme greed. Greed early in a supportive bull market is different from greed appearing as liquidity tightens and economic conditions deteriorate. The index provides the emotional temperature, macro conditions provide the context. Neither should make the entire decision. And I'm not going to tell you to buy or sell a specific percentage. Everybody's finances, goals, timescales, and tolerance risk are different. But this is a guide to help you think, not personal financial advice. However, I wanted to understand what the historical relationships between these zones actually look like. So I collected every single fear and greed reading since the index began on February 2018 and matched those readings against Bitcoin's daily price. Then I created a hypothetical experiment. We began with $20,000. First, we used that $20,000 to hypothetically buy Bitcoin at the average price across the first collection of extreme fear readings. Then we're going to wait for the next collection of extreme greed readings. At that extreme greed average price, we hypothetically sell exactly 50% of the total Bitcoin holding. We keep the other 50% of the Bitcoin. The cash from the half we sold is banked and left completely untouched on the sidelines. We don't chase the market. We don't immediately buy back in. Wait until the market eventually returns to extreme fear. At the average price across those extreme fear readings, we use all the cash we previously banked to buy additional Bitcoin. That new Bitcoin is added to the 50% that we didn't sell in the first place. When extreme greed next returns, we again hypothetically sell off half of that now larger Bitcoin holding. We bank the cash and wait for the next extreme fear period. We repeat that process through every available cycle without adding another dollar of outside money. This historical illustration uses the completed average prices to demonstrate the difference between periods of fear and greed. With that understood, let's look at what happened. Across the first collection of extreme fear readings, Bitcoin's average price was approximately $5,749. At that average, our hypothetical $20,000 represented approximately 3.48 Bitcoin. During the following extreme greed reading in 2019, Bitcoin's average price was approximately $10,215. The next collection of extreme fear readings produced an average price of approximately $7,470. After hypothetically recycling the proceeds from half of the position, the Bitcoin holding increased from approximately 3.48 Bitcoin to 4.12 Bitcoin. But this didn't work perfectly in every cycle, and that is important. Across the extreme greed period, running from 2020 to 2021, Bitcoin's average price was approximately $29,520. The following extreme fear average was actually higher at approximately $35,203. That reduced the hypothetical Bitcoin holding from around 4.12 Bitcoin to 3.79 Bitcoin. So this is not a magical system that wins every single time. However, you could have skipped that section and not sold any at all because that would have made more sense. But for this system, for what I'm explaining, I've done it for the maths. Then we reach one of the most important periods of the data. Across the late 2021 extreme greed readings, Bitcoin's average price was approximately $61,593. Across the collection of extreme fear readings that followed through the bear market, the average Bitcoin price was approximately $28,499. That difference increased the hypothetical position from approximately 4.07 Bitcoin to 6.44 Bitcoin without adding any new outside money. The pattern continued across the later cycles. The 2024 extreme greed average was approximately 65,401. Compared with the following extreme fear average, which was approximately $57,728. The next major extreme greed collection average was approximately $95,505, followed by an extreme fear average of around $84,980. Then the available 2025 extreme greed readings averaged approximately $113,462, while the latest collection of extreme fear readings that we're in right now is giving it approximately of $75,448. And that brings us to the final result. The original $20,000 represented approximately 3.48 Bitcoin during that first extreme fear cycle. If we had simply held that Bitcoin, it would be worth approximately $220,000 at the Bitcoin price used for this experiment. But our historical fear and greed illustration finished with approximately 9.12 Bitcoin, worth around $578,516. That is approximately 5.65 additional Bitcoin without including another dollar of your own money adding to it. The hypothetical Bitcoin holding became approximately 2.62 times larger than if you'd have just held it. So what does this experiment genuinely tell us? First, fear and greed has historically been more useful as zones than in individual daily signals. Second, you do not need to capture the exact bottom or the exact top to make an enormous difference. Trying to identify one perfect price creates pressure that most investors simply do not need, and most of them cannot handle it. Third, taking some profits during periods of widespread euphoria can potentially create capital for opportunities that appear when the sentiment eventually collapses. And fourth, doing what feels emotionally comfortable is often the opposite of what produces the best long-term outcome. When prices are rising, social media is filled with enormous predictions. Buy-in feels easy, but that is often when risk has increased. When prices have fallen and everybody is declaring that crypto is finished, buy-in feels frightening. And that is often when value has improved. That does not mean blindly buy on every crash. Projects fail, conditions change. Bitcoin itself remains volatile and risky. This index should sit alongside proper research, an understanding of macro conditions and personal risk management. Before making any decision, I think there are several useful questions to ask yourself. What emotional zone is the market currently in? Are the wider economic and liquidity conditions improving or deteriorating? Am I acting because of evidence or because social media has made me frightened or excited? Also ask yourself, are you risking money that you may actually need in the real world? And also, do you have a plan for eventually taking profits? Or am I assuming prices will rise forever? The Fear and Greed Index cannot answer all these questions for you, but it can help you recognize when emotions is beginning to take control. You do not need to identify Bitcoin's perfect bottom or the perfect top. You need a process that stops fear and greed from making the decision for you. So let me know honestly in the comments, when the market enters extreme fear, do you become interested or do you freeze? And when extreme greed arrives, do you take some profits or convince yourself that prices can only continue to rise? If you found this useful, make sure you like this video and subscribe to the channel. And don't forget, the new episode of the UK Crypto Podcast are released every single Friday at 7 PM UK time on YouTube, Spotify and TikTok. I'll link the full YouTube playlist above my head, somewhere above here, so you can watch the latest episode straight after this video. Thanks for watching, and I'll see you on the next one. And remember this, the strength of the wolf is in the pack.